Hello, and welcome to The Upside with Eli, joined today with Brandon Murphy. Welcome.
Thank you. Good to be back.
Yeah, it's been a bit since we last recorded, eh?
Yeah, a bit of a crunch at the end of February, getting a few things out, but we're back and we're ready to go.
Yeah, no, right on. Well, thanks for taking the time to chat. We're getting into tax season here, and things are going to be getting pretty hectic for you. So, thanks for taking the time. But yeah, for anyone listening today we are talking all about Brandon making the transition from being just a bean counter to a bean counter in the wealth management industry. So, for those of you who don't know what a bean counter is, that's another term for an accountant. Wanted to chat today about just kind of your transition, and for those listening, maybe they are accountants looking to get in the wealth management industry, or for just people who are interested in understanding kind of more about your practice and kind of what you do. I'm excited to kind of jump into it. So why don't you start by walking us through kind of your background? How did you start as an accountant, and what did your career kind of look like early on?
Yeah, it's a good question. It's been a journey, a few years. I mean, that getting that CPA, that takes some time. I was reflecting before we met here on how I ended up here in wealth management after being an accountant, being a bean counter. Low grade term for an accountant, but
they are much more than that.
Yeah, I'm not as much in that world anymore, so that's all right. But yeah, basically, if I look back to where I was even around high school, I had definitely an affinity towards personal finance. Read a lot of books in that space, and I went through the big one there, Warren Buffett's Benjamin Graham. What's that one again?
The Intelligent Investor?
Intelligent Investor, yeah. Got it sitting on the bookshelf these days, but big read for an 18-year-old. But I remember reading that one, and a lot of it was about understanding financial statements, understanding how tax works, and also had some family friends that were in the accounting space. And sort of had an affinity towards it. I wasn't set on it when I initially went to university, but I took that first course, that intro accounting, did quite well, and I just absolutely loved how everything connected.
Nice.
The debits and the credits, they always balance.
Which is a good sign for an accountant. If you're able to balance everything at the end of the day, that's good. Yeah. Because I know a lot of people who took first year accounting and nothing balanced.
Yeah, exactly. And for me, like there was finance, and I found the courses themselves interesting, but when you take finance in university, it's not necessarily like wealth management and financial planning. You're running complex models, you're looking at investing, you're doing discounted cash flow models. So I guess, long story short, I had that affinity towards accounting, making everything balance and getting into the weeds. And I like to make things 100% correct. And that is how the accounting world operates, is black and white, generally speaking, black and white. There's some gray area, after university, I had a fairly normal accounting career trajectory. I started out at Big Four, doing public company audits and doing those busy seasons that everyone sees on Instagram and TikTok, and putting in those longer hours. It was a grind, but I learned a ton. Like, I have no regrets going to Big Four and getting to work on those complex files and work on public companies and actually see the financial statements and not just understand income statement, balance sheet, but what are the other 35 notes below that? What do those actually mean? What are the estimates that are going into it? And then I went to a mid-sized firm and started working on smaller files, started working in tax, got to start to train and mentor other staff, got to work on the recruiting team. And at a certain point, I started to realize that the day-to-day accounting work, it wasn't uplifting me anymore. And what actually got me more excited was the 20% of the job, where I was teaching either staff or I was teaching clients about their financial statements, or I was on the recruiting team trying to find other staff that are going to become CPAs, or it was even building proposals, so trying to land new clients. But unfortunately, that was 20% of the job, and I was like, what's my long-term goal? And I've always sort of had this distaste towards kind of the general finance industry and how people are brought up, and they're not really taught anything in school about finance. And my long-term goal is to basically teach as many Canadians possible about finance and get it back to basics, because there's so much noise out there right now, and in social media, what you see online, what you see through advertisements, versus 30 years ago, there basically wasn't enough noise, and you thought investing and you thought go buy a GIC.
Totally.
So, yeah, I guess long story short, bouncing around a little bit, basically I thought, where can I get this fulfillment of teaching, also freedom of my own time and building up a practice of,
sure. You didn't want to work in that the big four grind, because it is a grind during those heavy seasons.
Yeah, absolutely. And how can I teach people on a daily basis? And started looking around at different opportunities, talking to you, of course. And that was one of the biggest decisions I had to make, is how do I make this leap? Where do I go to next? And I love the idea of working at an independent practice where we can basically make unanimous decisions on who we want to work with, what companies we want to work with, and what products we're going to issue at the end of the day. So I wanted that complete autonomy, while being able to kind of teach and coach people along the way. So that's what kind of brought me to this point.
Yeah. And was there like a specific moment or kind of situation where you were like, this is kind of it? Or was it kind of just like a natural progression to this? I just didn't know what it looked like in the beginning.
It's a good question. I haven't thought about that one too much. It was definitely a compounding effect. I found as I was working as an accountant, I had my 9 to 5 where I was going to work, and I was doing those various things, whether it's tax, small business, audit. But I found on the weekends I was spending time researching personal finance, how to save taxes, not just in the moment. The accountant is there saving taxes in the moment, but the financial advisor's looking to the future. And I started building out a YouTube channel on the weekends. And I was like, how do I turn my weekend side hobby into a full-time career? And as I did more of that, it started to click. If I could think of one moment, it was this review engagement that I did at the firm I was at before. And we got to the end of the engagement. Nothing really exciting about the work, standard review engagement, standard tax return and everything, but it was a new business owner that was going into a board of directors meeting.
Okay.
And he was a little bit stressed about it. Like, he understood his business really well, but he didn't understand finance or tax or how to explain his financial statements to the board and what that looks like for the future.
Sure.
So we basically drafted this script. We drafted this kind of line by line, here's what's going on in your financial statements. And he took that to his board meeting, and then we heard back the next day, and he was like, thank you so much. That was very helpful.
So it was a successful board meeting at the end of the day.
As far as I understand, yeah. I wasn't there myself, but he was really grateful for that. And I was like, how do I get sort of that sense of fulfillment where you get that thank you, and you're helping someone every day. And I find now, since I've been here, that tends to happen on a daily basis.
Totally. No, that's great. What did people around you think when you told them that you were going to make the switch?
Not a lot of surprises, honestly. I think because I had started a YouTube channel,
Sure.
And when I would talk to friends and family, they would ask me about RSPs and TFSAs and where do they invest their money. And they could tell I was enlightened answering those questions. So as far as friends and family go, there was tremendous amount of support. No one overly shocked in that space that I was making this transition, but definitely a lot of questions. They're like, How do you go from being a CPA to now working in wealth management, or why didn't you do that from the beginning?
Sure. Yeah. And it's interesting when people say, why didn't you do that at the beginning? Because I would argue that you have better qualifications to give advice with a tax background than people who maybe have a bit more of an investment background but no tax background. Like I think leading with tax and everything like that, it's for me that's such a natural, kind of progression of things. And I don't think enough people come into the industry with that type of a background.
Oh, fair enough. Yeah.
Yeah. So from a transition standpoint, what would you say the hardest part of moving from accounting into kind of more comprehensive wealth management was?
Yeah, I'd say the first big step, not being in the industry at all, was where do I go? Like, where do I go work? So even before I started here at Up Financial, the big question I'd ask was like, do I go to a bank? Do I go branch level and kind of start at square one where I'm opening $10,000 RSPs for people? Do I go to an insurance company? Do I transition and do something that's kind of pseudo tax business, but now forward looking, like potentially valuations? And a lot of my research was Google, ChatGPT, watching YouTube videos for people that first got into the space. I always wanted to get my CFP, so I was like, well, when do I have to start that? And basically, I just started getting the credentials. I did the CSC, I did the life insurance course, and that's when we started chatting. And it was like, here's my plan. Here's my goal is to be completely independent and have that autonomy. And then as we started having conversations, it was like, okay, this is a good place to be because I get that autonomy. So that was the biggest step for me, is just kind of deciding where to go in the first place.
Where to get started.
Yeah, where do you get started? And very happy with my decision there. And then I think the next biggest challenge was going from being an accountant where everything has to balance, everything is perfect, black and white, to our space, which is generally forward-looking. We're looking at forecasted numbers, we're looking at estimates, we're building out a financial plan that has very little impact on today, but it has a huge impact over the next 20 to 30 years, and starting to work in the gray, I say.
Totally. Yeah, because there's so many different variables, kind of at play. And obviously we still do stuff, to save money in the shorter term and that, especially from a tax perspective. But yeah, you're absolutely right. You're used to, okay, this is the black and white way of this is what's compliant, not compliant versus, what do things look like over the next 20, 30 years? And you gotta take some educated guesses sometimes for sure.
Totally. Yeah. And I still find myself, like, one of our preliminary request list items is like a personal tax return, a corporate tax return. And I spend so much time kind of going through there line by line. And I mean, 50% of the time I find something immediate where it'll save someone a few $100s or a few $1,000s even. But it's taking a step back from that and looking at the big picture and saying, okay, how do we forecast this out and save you a lot of money and don't leave any money on the table?
Totally. Hundreds of thousands or potentially, millions of dollars over a 30, 40-year period, right?
Totally.
Yeah. No, cool. Was the accounting firm that you were with supportive of your transition?
First of all, very nervous to tell them about the transition because I really did enjoy working there. I enjoyed the team. And like I said earlier, I like mentoring the students. I like going to these recruiting events. I like teaching at conferences. And I know I was going to forego a lot of that coming into this space where I'm kind of working independently. But yeah, no, I at a certain point, I think it was in the spring. It was after busy season. I didn't want to drop that one during busy season. I said, hey, I went to kind of two of the partners that I worked most closely with, and I'm like, here's my long-term plan. Here's what I'm looking to do. I got kind of their input on it, and they were tremendously supportive. I was quite shocked at the support, because there's always a concern that they'll be like, oh, you don't want to be here anymore, then next week is kind of your last week. But
totally
wasn't the case at all. They were happy to keep me on as I made the transition, and now it's become a great referral network.
Yeah, absolutely. I think I was certainly impressed with kind of the way that they handled that because I've seen, different sides of various kind of things, but just in terms of like how supportive that they were, and it's worked into great relationships, in terms of we're happy to support them, and we have, especially in terms of like more complex case and things where we need, kind of third party, like a larger institution like that for some specialist access. It's just like leaving on that kind of a note is such a positive experience versus taking someone that like, you poured your heart and soul into for many years, and then to leave it on a sour note. It's just so nice and refreshing when you hear these stories of like, yeah, they were just happier for you to kind of go down the path and support you kind of in that. So we wanted to shout those guys out a little bit.
Yeah. And that may not be the case, everywhere or every firm, but they were kind of a smaller firm with a bit of a smaller team. And yeah, they're very supportive in that. And I think, and you probably agree with me, the professional services industry at the end of the day, we're all looking to learn and we're all looking to benefit each other. I'm sure there's a 5% out there that's kind of off on their own, but generally speaking, we're all here to teach each other, whether that means giving presentations on things that we understand and know really well, and then vice versa, having accountants and people that do kind of complex tax reorgs all day, they can give presentations to us so that we can all learn and just help our clients at the end of the day.
Absolutely. Couldn't have said it better. How long did the transition take before you kind of felt fully comfortable, working with clients on this side?
Yeah, I put that into two components. The tax side, like you said, was a pretty easy transition. I had always kind of done some financial planning for myself and for some friends and family members, like my parents especially over the years, is kind of building out their own retirement plan. So the financial planning aspect, the tax planning aspect was a fairly quick transition, like a matter of weeks of moving over here, and I had a pretty good grasp on that. The investment side was newer to me, for my own investments in the past, a lot of it was automated. I knew what it was invested in, and I understand like it was a long-term growth investment for retirement accounts. But again, you guys here and the models you've built out are really, they're easy to understand. There's nothing exciting about it. We're not necessarily reinventing the wheel. I think you said it well yourself. Be boring, make money.
Yeah, more investments. I love their slogan. I stole that from them.
Oh yeah.
Be boring, make money. Yeah.
Yeah, and the portfolios here have performed really well, and I've kind of just backed onto those and backed onto it with Nathan's support. So understanding that, I would say in a matter of a month or two, I had a good grasp on that side as well. Again, the accounting background really did help with that because you have that understanding of financial statements. I had audited OMs and trusts in the past.
Oh, you had?
Yeah. So you kind of have that understanding of what's underlying line by line.
Yeah.
And today now it's just understanding, okay, we have a portfolio. What does that look like in terms of big picture? Because there could be hundreds of underlying securities in there. No one is taking the time to read hundreds of financial statements. But just having that understanding of, okay, if we have to read the OM or we have to read individual financial statements, I would be able to understand that and explain what's going on.
Totally, and be able to regurgitate it to a client in a digestible, kind of manner that they can actually wrap their head around it to make a proper informed decision at the end of the day, right? That's such a key skill to kind of have.
Yeah, for sure.
Cool. So why don't you walk everybody through how does your practice work today? What does a typical client engagement look like?
Yeah. Well, the thing with me is I made the bold decision of starting two businesses at once. So I have my CPA firm, which is very traditional in a firm sense. The one unique thing that I do is I generally stay away from billable hours and charging clients on billable time. So I operate that as, I call it a business advisory practice, where we operate on a monthly subscription, and basically clients can reach out anytime. They can ask me any questions, happy to answer them. And it includes all the other services that you would get from an accounting firm without the hesitation of additional billable hours. So I won't speak much on that one, but on the wealth management side, that practice generally, if I'm meeting a new client, it's not a quick discussion. It's not a 30-minute phone call to say, here's what we do. Do you want to work with us? It's a process. So I want to get an understanding of what you're looking to accomplish over the next 5, 10, 20 years, short, long-term goals. And then we're going to actually build out a plan. We're going to see what it looks like today. Are there any immediate tax planning opportunities? And then we're going to see what do things look like 10, 20 years from now in terms of your retirement plan. I like working with business owners, so it's business planning as well. I like to go through their financial statements with them and kind of project out what's the future of your business. Are you looking to sell it? Are you just looking to build up invested assets in your business? Do you want to pass it on to your kids? And how does that all factor into the plan? So really taking it back, building out that plan for them so that they can see what this is going to look like if we want to work together. Because when I have that initial phone call, I tell people that you're talking to me today, and I hope we're still talking 20 years from now. It's not a 3-year decision, not a 5-year decision. Like, I'm early in the business and I plan on staying in it a long time. So I want clients that are also with me for the long road.
Totally. Yeah, that makes perfect sense. And so do you find clients come to you, I guess, more from the accounting side or the investment management side, or a combination of both, or how does that kind of start?
Definitely a combination of both. I find some clients will reach out initially looking for just a personal tax return, and they're potentially not happy with their past accountant, or they don't have an accountant, but now their situation is getting a little more complex. So they reach out looking for advice on their personal tax return. And I'm like, well, I'm a wealth manager. This is really what I do. Doing your personal taxes is 5% of my job, but we should really build out a bigger plan. So some clients are reaching out with simple questions like that, where we then build it out into that longer term relationship. And then on the other side, I have a background as a CPA in tax. I understand finance and getting clients just in a traditional wealth management sense. And then we're working together for the long journey. But yeah, I'd say people reaching out in both aspects. And I've had some clients now where we're doing the corporate tax, personal tax, kind of the business advisory side, and then moving them into the wealth management side as well.
Yeah, no, that makes perfect sense. So what mistakes, in terms of kind of combining both, areas of that practice together, I guess, what mistakes do you see clients make when their accountant and their financial advisor aren't typically talking? Because now you have the ability to kind of, manage both of those things together. I guess, what mistakes do you kind of see clients make when they don't have those two pieces connected?
That's a good question. I think Dylan said this really well once before, is he said the financial advisor is like the architect, and then the accountant is like the builder. They're putting the pieces together to make sure everything is accurate and up to code. So I think when those two parties aren't talking, you could have a 10-year tax plan where we say we're going to save you hundreds of thousands in taxes by implementing this plan, but the system has to be actually followed every year. And if it's not, we're going to look 10 years down the road and the plan is going to fall apart essentially. So when you look at a simple example would be looking at a personal tax return that the accountant sees every year, and it's someone in a 48% tax bracket, and they've got a bunch of interest income, or they got a bunch of dividend income, or their OAS is getting clawed back because they're drawing significant dividends out of their corporation that are being grossed up.
Yep.
And potentially they should have delayed OAS, or potentially they should be taking less dividends out of their corp. It really depends on the situation, but the accountant might see that every year, and maybe they go to the client and they say, here, this is what you should be doing. or maybe they don't say anything at all because all they're doing is compliance. They're filing the taxes. And then on the other side, the financial advisor may not be looking at their tax return every year or not having that full understanding of how their investment income is being taxed, how it's impacting their OAS clawback and examples like that. So connecting both of those pieces and really making sure that that system is implemented and working every year, I think is vital.
Totally. And I see that, every day, obviously the way we run our practice. And, I came into this, industry with more of kind of that investment side background and then developed all the tax, right? You've just kind of done it in the reverse format. But I agree with that, like wholeheartedly. Like if you're only working on one side of a client's picture, like there's just things that are naturally going to get missed. And we never want a client to look back 20 years from now and go like, wish someone told me that 20 years ago,
Yeah, exactly.
Cool. Do you think every wealthy Canadian should have their tax and wealth management under one roof?
I mean, I'm a little biased in that answer. I think it comes down to relationship. So if you have an accountant that you connect with really well, I would say if you have an accountant that is not simply just filing your taxes and then you don't see them until next April and you're not talking at all, especially if you're a business owner, that's not ideal. You should have someone that you're meeting with throughout the year that's there to kind of answer your questions and coach you along. Otherwise, there's a lot of synergy to having both under one roof, because back to what I was saying, you can set up a 10-year plan or a 20-year plan, but then you also have a team of people, the builders, that are making sure that the compliance, the actual filing is aligned with that plan so that we get that 6 figures in tax savings over the long term, and it's not just a one-time thing.
Yeah, makes sense. Excuse me. What's interesting too, I found, is that from a planning kind of perspective, there's also specialists, right, who specialize in kind of specific areas, or people have really good relationships with clients. And we have the ability too, if you want to, it's like, no, keep working with your accountant. They're doing a really good job. I'll just work in conjunction with them. And the thing that I found interested is the proportionate number of CPAs who might reach out to you to manage their investable assets, because you guys speak the same language, maybe more so than a lot of other advisors from a tax perspective. So it is interesting that, you don't have to have all that in house if you have, but you need to have that a certain level of relationship with kind of all of those individuals. So. But yeah, it's always interesting to see the number of CPAs who reach out to you and say, "Hey, can you manage my investments?"
Yeah, exactly, and it makes that tax conversation a lot more fun because we're on the same page with everything, and we don't have to get into the details as much. But there's always other aspects of planning that can be beneficial.
Totally. What do you think is broken right now about the way most Canadians currently get financial advice?
Couple things. I think, and kind of going back to the start, if we go back 30, 40 years ago, there wasn't much for resources out there. You went to a bank, you sat with someone that say, this is what a mutual fund is, this is what we're going to put you in. They weren't building out a tax plan, they weren't doing estate planning, anything like that. And if you didn't understand investing, lots of people would understand how a savings account works or how a GIC works. And as we know, with compound interest, if you just put your money in GICs for life, you're losing to inflation or barely keeping up with inflation. And so I think the industry kind of did a disservice in that aspect 30 years ago, and that's kind of catching up today when we meet with retirees that are coming up on retirement. And fast forward to today, we went from lack of information to information overload. You can go on ChatGPT, you can go on Google, and then just the constant stream of information that's coming out of social media. If we sat here and talked about buying a new car, I could open my Instagram and it's going to be new car ads and how to get a car loan. And it that constant feed, I think it gives people information overload, but they also make quick decisions now on things like buying cryptocurrency, buying into commodities, gold or silver, or just making quick decisions on buying a home or purchasing a vehicle or taking out a new credit card, and it's almost too accessible. Whereas I find that the clients I work with now, they have a decent understanding of these things through social media or through their own research that they've done, but they want to talk to a human. They want answers, and they want someone to actually make a recommendation that doesn't just feed on what they input into a model. Because if we use ChatGPT for a good example, it's really just pulling from various other resources on the internet, and you get that confirmation bias.
Totally.
When you put information in there. So I was going to say, yeah, exactly. That's what you should do. That's the best way to do things.
That's why you see all those memes from chat now, right? About they just agree with everything that you say until you call it out, and then it goes, "Oh yeah, you're right."
Yeah, exactly. And I
was wrong.
I like doing that with tax questions sometimes, or I'll put it in there and then it'll say something wrong, and I'll be like, "What about this though?" And it's like, "Oh yeah, you are right." But I think it gives people the ability to do their own research, ask questions, but at the end of the day, they want someone they can trust and someone that they can make a recommendation that they understand, and someone that's going to teach them over a 10, 20-year period.
Totally. And again, going back to, kind of our whole mission and kind of in terms of our firm is that advice is always unbiased. It's met with a fiduciary, kind of responsibility, and that it's always going to be, kind of in your best interest ultimately, right? So I think that's a key part of that too. So I guess kind of in closing, what do you know now that you wish you'd known kind of at the start of your career?
What do I know now that I wish I had known at the start of my career? I wouldn't say there's anything I would do different per se. I think putting yourself out there for anyone that wants to get into this industry. I started putting myself out there just on like a YouTube channel. Even if you're an accountant, don't sit behind the desk and go in and just look at spreadsheets all day. Like if you're an accountant that actually wants to grow their business, work with us, help us out in kind of drowning out the bad information that's on Google, on TikTok, on Instagram, and kind of put yourself out there to put out some unbiased facts, some good information. Not only is it kind of benefiting greater Canada or society, but it's going to benefit your practice. You're going to have clients reach out, and you're going to post something niche. You're someone selling a rental property, or they're getting an inheritance. You're going to post something like that. And there's going to be a handful of people in the country that are in that exact situation that are going to reach out for your support. And doing that, you're always kind of an expert on these new things coming out. It forces you to read the budget, to change or to read changes in tax legislation, or understand new models and do research on retirement planning. So it keeps you informed as a professional, whether you're an accountant or a financial advisor. But it also just provides great value to everyone else out there that's kind of been disserviced by the school system in terms of personal finance.
Yeah, no, I love it. I love the fact that there's the continuing education piece. I always say when I fill out my C credits every year, and I've always got more than enough, but I think about how many hours of education that I've developed just from researching different things and making content. It's amazing how it really does keep you at the top of your game, and you're also able to kind of give back and help and teach people. And then obviously the main focus is typically in terms of client acquisition, but there's all these other incredible kind of benefits that kind of come along with that.
Yeah, absolutely. So for anyone out there looking to get into the industry, it's don't be afraid to put yourself out there. Don't worry about what your friends or family are going to think when you make those first few posts on personal finance, because if you've always talked about those kind of things, they're going to see it coming anyway.
Totally. So lastly, where can people find you if they want to work with you? I know everyone who listens to this obviously is going to automatically want to work with you, which we love to hear. You work at the greatest wealth management firm in the world. How can people reach you?
Lots of places. You can find me on the website, Up Financial. You can send me an email, brandon@upfinancial.ca. And then find me on social media, Murph on Money. Same username on TikTok, on Instagram, on Facebook. And I'm constantly posting good information out there. So
yeah, and you're not an AI bot.
Despite what some of the comments say, I am not Sheldon Cooper, and I am not an AI bot.
Awesome, man. Well, thanks so much for joining me today, and yeah, we'll chat soon.
Cool. Thanks for having me.